Welcome back to Tax UK with myself, Adam Hill, where today I'm going to be showing you how to complete the 21-22 self-assessment tax return as a limited company director shareholder, which tends to cover anybody who is trading via a limited company. I'm going to share my screen with you and work through the whole return. All you need to be able to follow this through is to be registered for self-assessment and have access to your government gateway account. So I'm picking this up here from the tailor your return section. We've skipped over welcome and tell us about you because all you're doing there is confirming your personal details, your address, your national insurance number, that type of thing. So we'll brush past that. Everybody should be able to get to this point here. And then the very first question relates to limited company. So anybody trading via a limited company. Remember, in this example, I'm assuming that with our limited company, we are both a director and a shareholder. Directors are those charged with stewardship of the company, the management usually. Directors often take a salary from the company. Shareholders are the owners of a limited company. They own a share or a number of shares in the company, and they're entitled to a share of its profits, usually by way of dividend. Okay, and in lots of cases, if you run a small limited company, you will be both. You'll be a director and a shareholder, and that's what we're assuming in this example. So the first question does relate to our limited company operators. Were you an employee or director? Okay, that applies to us here. So I'm going to say yes. I'm going to select one directorship and I'll put an example as the name of the company. Now, just note here, you can be a director in a limited company and not actually take a salary from it. It's not a guarantee that you are taking that salary, and sometimes for tax efficiency reasons you won't take a salary. You'll take more dividends depending on your individual circumstance. So if you are a director but you are not taking paid remuneration, you're not taking a salary from the company, you don't have any income from it, from your directorship, then you do not need to declare it. You would say no here. In this case, I'm saying yes, and we'll go with this example. Following that, we're talking about different types of income that you may have. So do you have self-employed income? Do you have partnership income, which is, joint self-employment, normally with more than one person? Income from land or property, foreign income, or capital gains? I'm saying no to all of these. Of course, if you did have any of those incomes, you'll need to tick yes, and then the relevant section of the return will be generated and you'll be asked to complete it. On page 2, we're asked about more different types of income. Interest, I'm saying no. Dividends, again, this will apply to limited company directors, or may apply to limited company directors. This is your share of the profits, and you need to declare anything above £2,000. You are entitled to a dividend allowance nowadays, so if your dividends are under £2,000, they're going to be covered by that allowance anyway. But I'm saying yes in our example. And then no to pensions, no to child benefit, support payments, COVID support payments, other UK income, income tax losses, pension savings, tax charges. So again, we're assuming the only income is from our limited company in the form of dividends and in the form of salary from the directorship. So we get to say no to every other type of income. Did you make contributions towards a personal pension or retirement annuity? Again, I'm saying no, it could apply in this situation. And you may end up, if you're a higher rate taxpayer or additional rate taxpayer, you may end up getting additional tax relief if you've made contributions. Any contributions to charity, married couples allowance. Now, married couples allowance is an old allowance if you were born before 1935, so it's quite unlikely, but you used to get additional allowances for being married. It's now changed, so we have below that the more modern version where you can transfer up to 10% of your personal allowance to your spouse or civil partner. And typically, you only want to do that transfer personal allowance to your spouse or civil partner where you are the lower earner and they're paying much higher tax than you, then it can be beneficial. Do you want to claim other tax reliefs? Again, we're using a very basic example here. So we're going to say no to all these additional questions about tax advisors, avoidance schemes, and acting on behalf of other people. This is just a very quick guide to limited company director shareholders only. And you can see here that we've now generated the relevant sections of the return. So it's only asking us for our employment income, which is our directorship, and dividends, and along with the usual standard sections that we have to complete. So we can then jump to the first section that is uncompleted, which is our directorship. Now, if you are taking a salary from the company, you actually have pay slips to support that salary, and on those pay slips or P60 document at the end of a tax year, you're going to find a PAYE reference number, which relates to the employer, which is Example Limited here. So you pop that reference number in here. You'll then also need to take the salary amount, the gross salary amount from ideally a P60, or worst case from the last pay slip, although that's not as accurate if you take the last pay slip from that tax year. Tax that was deducted from your salary again will come from your P60, and then we're looking for tips and other payments that are not on your P60. So this is going to be quite unlikely for directors, I think, because typically it applies to people working in the services industry. If you are working as a waiter, maybe sometimes you receive cash in hand tips and they don't go through the books, and you're meant to declare that here. So unlikely to apply. Were you a director of the company? So if you're a director of a company, then you need to declare that here. And also if you ceased being a director. In this example, we'll assume that we are continuing the directorship. So we'll skip past that one. You don't have to enter a date. If yes, was this company a close company? So a close company is a company that is controlled by 5 or fewer participators. I think it's a wording that they use, which basically means if there's less than 5 people controlling the company, then you are a close company. So most small companies, most personal service companies where it's just you trading within the wrapper of a limited company will be a close company, and you'll need to declare that here. Is this employment income from inside of payroll working arrangements? Will not usually apply unless you are a contract worker. If you're doing day rate contract work, quite often in London, in the city of London, then that can apply. This relates to IR35 usually, but for limited company directors, if you're just trading as a general business, then it won't usually apply to you. And then we have the section asking about taxable benefits and expenses. So have you received any taxable benefits from Example Limited? If you did have company car, company fuel, accommodation, these types of things, you'll often receive a P11D, which will detail these benefits, and you'll have to pay, or you may have already paid additional tax on that. In our example, nice and simple, we're saying no. Do you wish to claim any employment-related expenses or capital allowances while working, for example? In certain situations, if you do mileage, if you pay for accommodation, if you pay for business-related expenses out of your own pocket and your employer isn't repaying you for those, then you can reclaim them and get, we can't reclaim them, but you can get tax relief for them here. Again, we'll say no for this example. Any other information? I always think typically you don't want to provide any additional information unless it is necessary, and it's only necessary if it's going to help somebody who was reviewing this return. If the numbers you're submitting weren't going to agree to HMRC's numbers, for example, because remember, employment income, HMRC already know about your employment income. Your employer already submits a return every month. via real-time reporting and tell them how much you've earned in a tax year. So you're only confirming the details, really. So if you were going to confirm details which were different for whatever reason than those that your employer had submitted, that maybe don't agree to your pay slips, then you'd want to explain that away here to avoid an investigation. And providing you give a good explanation, it makes sense to them, and you've treated it correctly, then you wouldn't have an investigation. But if you're submitting a basic return, you're confirming the details that they already know, then you won't normally need to provide additional information in this box. It's pretty pointless to do that. Now we're on to the dividend section of the return. So we've covered our directorship. We took a salary from the company. I've provided details of that. Now we want to provide details of the dividends that we took from the company, if you took any dividends from your company. And we will go with an example of £10,000 of dividend income. You can take this figure from, quite often you have dividend vouchers from your limited company, or you should do in the background anyway. If not, dividends are paid gross now from UK companies, so you can actually just take the figure that was deposited into your bank account, assuming that there was no tax or anything withheld at source. Other dividends, total amounts received, we'll leave that blank. We just want to lump all of our dividends in here from our limited company. Foreign dividends, you're given a chance to declare any foreign dividends, and then if there was any tax that had been taken off of your foreign dividends as well. Now we're on to just the general admin sort of pages of the return. So we've detailed all of our income. You just have to work through these additional pages and confirm that the details they're holding are correct. So typically you'll say yes to these and it'll show a figure of 0. Is there any underpaid tax from earlier years? They're saying that there's none. I'm happy with that. And then on the next page, a very similar situation. I'm happy that there is no tax from my PAYE coding notice. Save and continue. Again, on these pages, it's just a case of ticking the box. Any outstanding debt included in your tax code, you have to enter a figure. So I'll enter 0. And then we are given the option to claim a repayment, or provide details for claiming a repayment. So actually the way it works now is that if you are due a repayment, if you have overpaid tax during the tax year, then you actually have to submit your return, wait for 72 hours, log back into your account, and then click on a link to claim your repayment. Previously, in prior years, it worked that you submit your return, they see that you're owed money, they send a check to you or a bank transfer. I imagine they had a lot of issues with fraud with that because they just paid it out without really checking anything. So now it sounds like they're doing more of a review process for tax repayment. So just don't forget to log back in if you are due a repayment. In this case, I'm not going to be due one. If you owe small tax liabilities below £3,000 here for the tax year that we're submitting, then you can actually make an election to have that tax deducted through your PAYE code. So if you're earning from employment as well, it will get taken over the next tax year in smaller increments. I'll say no, and then they give you the option to do the same for the current tax year that hasn't actually finished yet. But most people typically prefer just to wait until the end of the tax year and then sort it out, but it is an option there. We then have adjustments. 99% of the time, there'll be no adjustments in here, so you can actually leave these boxes blank, save and continue. And then again, we're asked to confirm, first of all, if there's any provisional figures in the return. You would hope not. Most of the time, you want to be working from final figures, from your P60 for your income, from directorship, and from dividend vouchers for your dividend income. So you would typically tick yes here. If for any reason I don't know, you couldn't get hold of your P60 and you've had to guess the figure, then you could say that you've included provisional figures, by ticking yes for provisional figures. But HMRC would be expecting you to come back and correct that at some point. So you may be opening yourself up to more questioning there. Again, if there are no provisional figures, sorry, I got that the wrong way around, then you would say no here. Okay, but it's just a confirmation. More white space to provide additional detail. Again, if it's a straightforward return and you're just providing the basic numbers, you won't normally need to provide any additional details. You can attach workings and additional documents, but again, if you're just talking about dividend income and salary, you don't need to provide workings of that. And then you can see that we've completed the return. We now look through this and everything is ticked blue here, entered, entered, entered. Anything in gray, you would actually need to go back and complete those sections. If we move forward, you can then see the tax calculation. So it's telling you straight away there's £586 due, and I need to add that to my account by the 31st of January 2023. If you need to go and pay, you can see on the right hand side there are links to how to pay, and typically you can do that in a number of different ways, by bank transfer, by debit, credit card as well. Now, one little trick. This obviously tells you how much to pay and when to pay it, which is very useful. But if you want to know a detailed breakdown, then at the bottom of the page, you're going to find a link here to view your full calculation. So in here, you can see the different types of income. So I've got 30,000 from employment, which is my director's salary that I was taking. I've got 10,000 from dividends. So I've got a mix of two income sources. They're taking into account my personal allowance, and then they're going to apply tax on this figure here. And you can work through and just make sure you're happy with how you're being taxed, at what rates. You can see the dividend rate is a reduced rate here. 2,000 of my dividends are tax-free, and then the remaining 8,000 at 7.5%. You can see the employment income is being taxed at 20%. And you just make sure that you're happy with these figures here. And then you can save and continue. So that's a return actually completed. The only steps following that would be to print or save a copy if you need one, although you always have access to your previously submitted returns by logging into your government gateway account, and then to save and continue and actually submit your return. So you need to confirm that you've declared any government grants relating to COVID, and that all the information is correct. If you then click submit, it's going to ask you for your government gateway login IDs again, your credentials. Click submit, and that will get sent across to HMRC. At that point, you'll be given a reference number, a great long combination of letters and numbers. Take a screenshot of that and keep it. You only need that if for some reason the return went missing between here and HMRC, but you'd need to provide that to the technical team if that were the case. And that is it. That is how to complete the self-assessment tax return. That probably took less than half an hour or so if you are a limited company director, shareholder, or both. Thank you all for watching. See you next time.